Welcome to ForexTV.com. Today is Thursday, November 13th. I'm Kathleen Reddington with your New York Forex Market Buzz. The yen fell from its 2-week high on the dollar, and the pound falls to a 5-year low on the greenback. And now for a look at the latest headlines from the CP News Desk. Initial claims for unemployment benefits in the U.S. rose above the consensus expectation to a 7-year high of 516,000 for the week ending November 8th. This is up from the previous week's upwardly revised 484,000 level. Initial jobless claims were expected to fall to 480,000. Continuing claims rose to 3.897 million for the week ending November 1st, which is their highest level since 1983. Even as retail gas prices fall, U.S. drivers continue to stay off the roads. The EIA reported that gasoline demand fell 1.9% year over year in the week ending November 7th. U.S. crude supplies were nearly unchanged this week, while gasoline supply unexpectedly spiked higher for the second straight week. The U.S. monthly trade deficit narrowed slightly more than expectations in September, shrinking 4.4% to $56.5 billion. This was slightly better than consensus expectations of $57 billion and following an unrevised $59.1 billion reading in August. According to the Organization for Economic Cooperation and Development, the Eurozone and the U.S. are expected to remain in a technical recession until at least the third quarter of 2009. The OECD is forecasting that GDP in the Eurozone will contract 0.5% in the third quarter of 2008 and that it will continue declining until the third quarter of 2009 before seeing a modest rebound. A similar pattern is expected for the United States. Today we are joined by Meg Browne of Browne Brothers Harriman. Hi Meg, how are you today?
Fine, how are you?
I'm doing all right. Unemployment figures are at new highs in the U.S., but after the report was released, there was barely any change to the dollar or equities. Equities started falling slightly a little bit later on. Do you think that it's just going to ignore this release, or the gravity of the release will sink in later for the dollar?
I don't think this is I think everybody knows that the U.S. economy is entering a period of severe contraction. With some people looking at 4% fall in GDP in Q4. I think also that it's obviously the people are being laid off. The unemployment numbers are deteriorating and likely to deteriorate further, unfortunately. So yes, this number was not pleasant, but I have to add that it's a weekly number. It's not something people focus on. I think in the big picture, what is driving the U.S. dollar has more to do with people's positions than the outlook. Now, people's positions are being adjusted. Let's even make it different than that. It's deleveraging tied to this financial crisis. It's unwinding of positions funded with U.S. dollars or with yen, which had low yields, and those positions are being unwound partly because of the financial crisis, the outlook for the economy. People are having to unwind positions just to make payments before year end. Some of those payments may be that there are redemptions with clients demanding money, so they have to provide that money. These are factors that are more of an adjustment process after a number of years in which the dollar was on a weakening trend. But it's been triggered in part by the financial crisis and the outlook for the global economy, which isn't pretty at the moment, and this data just adds to that.
All right. Well, the CAD was down on a weak trade balance report, even though crude was little changed earlier this morning. It had been gaining prior to this report, prior to the EIA report. When will CAD catch a break? Because it seems like even when oil's up, CAD falls or finds a reason to fall.
The Canadian dollar is suffering from the same thing many other currencies are, which is really about the financial crisis. And with the U.S. dollar strengthening, that's not a positive for Canada. I think in a short-term perspective, currencies do. The dollar rally, for example, yesterday was overdone. The U.S. dollar rally, and so that's permitted Canada to pull back. But in the big Canada to pull back, excuse me. But in the big picture, the U.S. dollar is likely to strengthen further. We're looking at 130 early next year for example.
All right, well, speaking of some of these commodity currencies, there's speculation that the Royal Bank of Australia will intervene and maybe some other central banks will follow behind them. This caused the yen to come down off of its highs against the Aussie and the Kiwi, but it also caused the yen to fall off against the euro and the dollar. What is your yen strategy?
Well, the intervention story, yes, the RBA confirmed they intervened in Australia, but in the big picture for Japan, it's really unlikely that we'll see intervention. I should add, I spent 10 years working at the Federal Reserve on the intervention desk. I can tell you that intervention does not work well unless the fundamentals are shifting in favor of weaker yen. At this point, that's not happening. I'd add to that intervention on its own has not proved successful in the past. In fact, Japanese intervention, heavy intervention, during the height of their crisis had very little impact. They spent a lot of money intervening and it didn't help. In this case, the G7 statement basically ruled out intervention. The statement was made in lieu of intervention. The Bank of Japan on its own is unlikely to be extremely successful. And in this financial market, there's a problem with intervention, which is that there is real demand for U.S. dollars and yen as people unwind their positions. And if you buy dollars against yen, you're removing some of the dollars from the market, so you have a problem anyway. One solution might be to intervene in euro yen. But again, I think if Japan intervenes by itself, it's not likely to have a major impact. This isn't about position unwinding to make profits. This is position unwinding that has to be made, either because balance sheets are being shrunk or because people need to make payments.
All right, well, the pound was at record lows against the dollar, and the euro seemed to have evened out a little bit against the dollar. Are we going to see the pound come back at all? What needs to happen for the pound to rebound?
The pound is in a downtrend, and it's likely to continue. We see it going toward 140 early next year. Right now, we expect the pound to continue to weaken, maybe 144, 145 in the next 24 hours. The reason we think the reason the pound's losing ground, the UK is similar to the US in its financial crisis, its housing market crisis, and it's the downturn in its economy. That hasn't been a positive for sterling. In addition to that, and I hate to say this over and over, but it is the driving force in the market. As people unwind positions and buy dollars, it hurts other currencies. Sterling is one of the hardest hits this week, and one of the factors is its own financial situation.
All right, Meg, thank you for being on this show today.
You're welcome.
This has been your New York Forex Market Buzz with Meg Browne of Browne Brothers Harriman. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.